Good morning, it's the 25th of January. I'm Joe Neighbour from Signal Centre Talking Bull, and today we'll be going through the latest headlines of the market as well as an update on the charts from a technical perspective and see if we can find some opportunities and give you some indication about what we're looking at from as I say, a technical perspective today. So let's jump into the news. The US is putting as many as 8,500 troops on heightened alert for deployment to bolster NATO forces in Eastern Europe if needed, as Russian troops mass on Ukraine's border, offering a show of military force alongside diplomatic efforts to defuse the crisis. It's very clear that the Russians have no intention right now of de-escalating, so according to the US military, it makes prudent sense to deploy personnel at this time. So we wait to see if that issue continues to escalate, and obviously that will be front and center of market concerns at the moment. Aside from that, we've got Boris Johnson facing further allegations of rule breaking. Parties during the pandemic. His office has confirmed that staff gathered in Downing Street to celebrate his birthday during the first lockdown in 2020. The new allegations are likely to ramp up the anger and frustration among members of the ruling Conservative Party, many of whom have said they are waiting for the outcome of a wider government inquiry. So now getting to markets, it was a very interesting day yesterday. The Nasdaq 100, along with the rest of the markets, turned on a dime in the middle of the worst sell-off in 2 years and vaulted back into the green, erasing a loss of nearly 5%. The move was the latest in a series of heart-stopping turnarounds that have dogged markets amid rising tensions around Federal Reserve policy. It was the biggest of its kind since January 8th, 2001, in the middle of the come down from the dot-com bubble. Most of the other similar moves around this kind of magnitude were seen in the 3 years that took place after the crash of the financial crisis in 2008. So, really quite sort of historic moves in some of these markets. And it was a particularly frenetic session yesterday for global markets. At one point, the Dow over 1,000 points down. But as we'll come to shortly, there was some pretty significant rallies as well. So let's get stuck in. First of all, we're going to start off with foreign exchange just to get that out of the way. This is the dollar index. Yesterday, we saw prices continue to trade within the channel. We closed off of the best levels of the session, but still managed to post some green. And we have gapped higher today on the dollar index, currently up by 0.13% as things stand. Taking a look at euro US dollar, that continues to trade within this consolidation channel or flag pattern maybe that we're forming at the moment. We are showing some evidence of trying to break the lower end of this at the moment and take out this horizontal support that's formed around 113.14. If we see a clean break below that, then I believe we will see a continuation lower in line with the dominant trend. Still looking to target downside. Our downside targets at 110.58. Looking at cable, that continued its sell-off from this 50% Fibonacci level in green here at 137.05 and posted now 3 consecutive days of selling. So again, closed off of the worst levels of the session. We're posting a bit of green as things stand at the moment, only up by 0.05% as things stand at the moment, but ultimately it looks as though we are still in corrective mode and lower prices are likely. Taking a look at euro sterling, that had a pretty decent move yesterday. It's back within this channel. This may have been the indication we were looking for that a short-term turnaround is actually in the process of taking place. That's 21st of January. We saw a really large reversal candle form that was backed up by further gains yesterday to take out the resistance at 83.80. We're above that at the moment, only just or pretty much on it. So maybe we'll see a continuation higher there in the very short term. But overall, it's probably just going to be a corrective one before the sellers step back in. Taking a look at some of the riskier assets, Aussie US dollar, that posted losses yesterday, but again, off of the worst levels of the session as a result of that turnaround in risk that we saw yesterday around about midday in the US session. Looking elsewhere, it looks as though Aussie's looking a little bit more favourable against some of the safer haven assets. Look at that. I mean, looking at Aussie versus Swiss Franc. We're seeing quite a turnaround today, but overall the trend still remains bearish. So unlikely to be anything sustainable, I don't think, on the upside with that at the moment. So let's move on from FX to look at cryptocurrencies. Really interesting day yesterday for Bitcoin. As we know, we sliced through support at 39,600. And at the moment, we're giving this 50% fib level, albeit of going over at 30 candle. Really interesting. As you can see, we posted new lows within the session down to around about 33,000 on Bitcoin before an almighty rally took place to form a bit of a hammer candle there, which may indicate a short-term bottom in Bitcoin. And importantly as well, I think we closed above this 50% fib level. Bit of weakness on the table today with this, so we'll have to wait and see if it's got the legs to continue moving higher. The next resistance level now to target is this previous support that we were looking at 39,600. So it'll be interesting to see how it reacts at that kind of level. If selling is to continue, then we are not ruling out a trip back down to this 30,000 level on Bitcoin, which is the key lows that were supported throughout 2021, around about 30,000 down to 28,742. So still under a bit of pressure, I think, but yesterday's reversal will give the bulls some hope that a short-term bottom may be in place. Is it a similar situation in Ethereum? Well, it's still closed red on the day, but as you can see, well off of the worst levels of the session, reversing from lows of around about 2170 to close still red on the day, and we are getting a bit of red today as well. We've got some resistance at 2651. So any reaction into this level will be interesting. I think if we can retake this level, then we might be putting a bit of a fight with Ethereum, and we could see maybe higher prices in the very short term. But overall, it still looks like this is under pressure and lower prices will be seen. And again, not ruling out a trip back down to those 2021 lows around about 1730 on the daily chart. Let's take a look at crude oil now. That continues to hug around these highs, 7-year highs on oil. Yes, we've seen a little bit of selling pressure, but it's hardly anything to be worried about, I don't think. Just a really sort of mild correction, it seems so far. So while we continue to sort of hold around this level, yes, we might see a little bit of a grind lower while we let this uptrend line catch up, but ultimately it looks pretty bullish overall, and I think it may only be a matter of time before we see a break to new highs above 86.80 on oil. Taking a look at the metals, they did show some evidence of forming some bottoms recently. This is the silver chart. We saw a nice clean break above 23.43 and also took out this downtrend resistance level, but we're back below it. If we scroll a bit further out to the left-hand side, we can see prices have been stuck within this range on silver for a number of months now. This actually began back in August 2020. We are trading at the lower end of this range, so from a risk reward perspective, you'd think this would be a reasonable area to consider buying silver in anticipation maybe of a continuation of this range up to the highs at around about $30. So in the very short term, we've seen a break above this resistance here at 23.43. So now what we're expecting to see is this act as support. So any pullback to this level could be an interesting level to consider buying silver. And let's just have a quick look at this from a risk reward perspective. If you're buying into that support there, targeting a move up to the upper end of the range, and for a sensible stop, really it needs to be below the lows of the range, then you're looking at a risk reward ratio of about 3-1 on that one. So not a bad little setup if you've got the patience to run that over the next sort of few weeks to months on silver. Taking a look at gold. So that had a decent day yesterday, actually. So we've broken through this resistance at 1830. We've seen a little bit of a push to the upside, followed by a really nice pullback to retest what is now a support level at 1830, and that's done a pretty good job. So posted a bit of an engulfing candle yesterday. Yes, we've got a bit of red on the screen today, but we're only down by 0.22%, so it's outperforming silver at this moment in time. So in the short term, we could see a move up to these highs around about 1877. So again, just take a quick look at this from a risk reward perspective. If you're buying around current levels, targeting a move up to this resistance here, and you expect this to still do a job of support, then again we're looking at about a 3-1 risk reward set up there on gold, providing that this continues to act as a support level. That is pretty tight. I mean, typically I'd go for a stop below the low of the breakout candle, but that doesn't therefore make the risk reward as appealing. So worth keeping an eye on. It looks as though there is a little bit more interest starting to accumulate in gold following months of really not doing an awful lot. So now let's move on to the indices, where there's been some real interesting action over the last 24 hours and really, prior to that over the last few weeks. So this is the FTSE 100, failed into these highs here, almost made it to a recovery level above the highs that we saw just before the pandemic really sort of took hold. Didn't quite get there. 7678 is the level to watch on that. But as you can see, yesterday we saw a really large range take place on the FTSE 100. So we closed mildly lower on the session, but clearly we did see a lot of selling pressure throughout the session, and this is being backed up today with further selling. So are we going to see another retest of these lows that we posted in yesterday's session? When you get these kind of reaction lows take shape in market, I always believe that the market has a memory for these kind of levels, and you will eventually see a retest of them at some point. So I'd be interested to see what happens. It also kind of marries up with trend support. So if anybody is trading markets based on trend analysis and looking at using trend support lines, then yesterday they may have been stepping into the markets around those levels in the hope that there was a bit of a bounce. And duly there was, which was obviously good news for dip buyers, but it does look like it's still remaining under pressure. If we get another close today, that'll be 4 consecutive days of selling on the FTSE 100. FTSE 100 is outperforming some of the other markets. Again, it's being led by sort of the influence that we're seeing from mining stocks. Yesterday was a lot of defensive element for things like Vodafone and Unilever, actually, which helped keep things higher. And obviously the threat of raised interest rates is also helping bank stocks as well. Let's take a look at the DAX. So yesterday that actually got very close to the lower end of this range that we've been talking about, this 14,800 level. As you can see, we've got a couple of wicks here that have touched in previous months, May 21, again in October 21. We didn't quite get there in November 21, but we are pretty close in January 2022. So 1, 2, 3, 4, 5, 6 consecutive days of selling, and if things stay as they are now, between now and the close of business today, that will be 7 consecutive days of decline on the DAX. Really interesting level, this 14,800. I think if we see that level give way, then there's a lot of fresh air for this to move into. And what I believe will be forming here is a nice rounded top formation on the DAX. It's not really a clean head and shoulders, although maybe you could argue that there is one that's formed here. So this would be the left shoulder, this will be the neckline, this will be the head, this will be the formation of the right shoulder. So maybe we are or have or are in the process of forming a head and shoulders top here on DAX. I would always use a horizontal level as a guide for a break of neckline. So I know I can see this is trending higher and we managed to hold on to it there, but I would prefer to see this level 14,900 taken out and also 14,800 taken out. So if we get into this sort of region on DAX, then I think we can safely say we have completed a top and we can start looking for lower prices, even lower than what we've already seen over the medium term with that particular market. So keep your eyes peeled there. Let's look at the Nasdaq now. So really massive turnaround yesterday. We hit this support level that we've been talking about, 14,066 yesterday, and that kind of triggered a really huge reversal intraday. As you can see, we actually closed on in the green in yesterday's session, despite this massive move to the downside, over a 5% move. So we made the sort of range target that we had quite easily. We almost saw the extension of that, the 161.8 extension of that as well. I had a look at this on the gun to the head trade yesterday and it worked out quite nicely, made a nice little 2R on that. But is this forming a larger top potentially on the Nasdaq? Maybe some big old warning signs flashing up here. On the tech heavy market, we've got a lot of earnings due out as well this week that we need to be aware of. Today we've got earnings from AMD, Microsoft and Verizon, which are likely to dominate the session. So potentially in for more volatility, already down 2% on the Nasdaq, so giving up some of those gains that we saw yesterday. Take a look at the S&P 500 now. Similar sort of chart to what we've seen on the Nasdaq. We have seen a break of trend here on the S&P. We've seen this horizontal support of 45.80 taken out as well. We have got some support around here from these key lows that we posted back in October last year, and they were tested yesterday, but we saw the buyers step back in. So I'm wondering whether or not maybe this is another situation where we're seeing a top formation take shape. Maybe this is a left shoulder, then we're forming some sort of head before we then form some sort of right shoulder over here before a move to the downside. Sorry for the crude drawings, but this kind of gives you a bit of an indication about what I'm thinking may happen here on the US markets. Tops are generally a process. They don't tend to happen instantaneously. We've seen a break of this trend, which is, the first warning sign maybe. We've seen obviously some effort from the dip buyers yesterday to step back in and support it, but they're giving it up again today and we're seeing more selling. So I think we're in for a rough few weeks and potentially months on some of these indices. So do be careful if you're trading them or looking to buy the dips. Finally, let's take a quick look at the Dow Jones. That slammed into a cluster of support levels, the most important one being the 33,231 level, which we've got highlighted here in blue. So we hit that pretty much to the tick, and that sort of provoked the rally higher in the Dow, which was, obviously a pretty substantial one, but we are seeing selling again. This is outperforming actually at the moment. There's a few big defensive names in the Dow 30, which will be, attracting a little bit of interest here as people look for safer places to store their investments. So naturally, we are seeing the Dow outperform the broader index of the S&P 500 and also the tech-heavy index of the Nasdaq. So let's move on now from the charts to take a look at the gun to the head trade from yesterday. As I mentioned, it was on Nasdaq, so a little bit of a tick up in performance yesterday. Managed to hit a 2R win. I had a really big stop loss and target on that one, which I was quite surprised really that it hit. But you've got to have a go at these things and set your limits aggressively where you can, because you never know when you're going to get those big bouts of volatility. And it's those big wins, not that I've got a big win in this instance, but they're the ones that make the big difference to your profit and loss over the course of your trading journey. So what am I going to do today? Well, nothing really particularly standing out. I'm a bit worried about what I'm seeing with these indices because they are giving it up following that rally that we saw take place yesterday. In all the charts that I flicked through, is there anything that attracted me? Maybe gold. Looking at that on a sort of quite aggressive basis, I suppose. So as I mentioned, we've seen this breakout above resistance at 1830. So far, we've seen this level hold as support. So I'm going to back that to continue doing the same. So I'm going to buy it now at 1838 and a half. I'm going to target a move up to these highs at 1876, and I'm going to go really tight with the stop, hoping that this level at 1830 continues to do a job of support. So I'm going to put that at 1826 spot 3. So looking for 3.2R return on gold today. That's a daily chart there that I'm looking at. Normally I'd be looking at hourly or 4 hours, but I like the setup there on a daily. So let's see what happens with that. Okay, so the day ahead, I've already mentioned that we've got a couple of earnings out. We've got AMD, Microsoft and Verizon. On the macroeconomic side at 9 a.m. today, or already been out, we had the German IFO index. The business climate index was expected to rise to 96.5. And then at 3 p.m. today, we've got the US consumer confidence figure. The index is expected to fall to 113. So keep an eye on anything linked to US dollar and those those US indices later today. That's it from me. Hopefully that's been insightful. Obviously, we've been tested quite severely in terms of volatility and concerns over what's going on in the wider market over the last few weeks or so. So do be careful out there if you're trading. And obviously risk management is very important. So trade safe, everybody. I'll be back tomorrow morning with a further roundup on markets. Take care. Goodbye.